You worked all year to save $10,000. Your bank's reward? $5. I want to show you what a different bank paid someone for the exact same money, and why your bank is quietly hoping you never find out. Today we're talking about high-yield savings accounts, what they are, what they actually pay, and whether one makes sense for where you are right now. If you already know what a high-yield savings account is, stick around, because most people who think they understand them are still leaving hundreds of dollars a year on the table. If you've never heard of one, this might be the most useful few minutes you spend this week. The gap between a standard savings account and a high-yield savings account is bigger than most people realize, and the math is simple once you see it. We're covering all of it. Let's go. Most people have a savings account they opened when they got their first checking account. Same bank, same branch. They've had it for years and never thought twice about it. That loyalty is costing them real money. Big brick-and-mortar banks typically pay between 0.01% and 0.10% APY. In plain terms, $10,000 sitting there earns you between $1 and $10 a year. $5 for a year of your money sitting there. $5. Meanwhile, inflation runs around 2 to 3% in a normal year, sometimes higher. So your money earns a little interest, loses purchasing power faster than it gains anything, and the number in your account still goes up. That's the trick. You feel fine. You're not fine. This isn't an accident. Big banks don't need to pay you well. They have millions of customers who won't bother to switch, and they're counting on that. Here's the part that got me. Give me about 2 more minutes, because I'm going to show you what this gap looks like compounded over 5 years. The numbers surprised me.
A high-yield savings account is a savings account that pays significantly more than a traditional one. The name says exactly what it is. These accounts currently pay somewhere between 3.5% and 5%, depending on the bank and when you're watching this. Rates move with the federal funds rate, so they're not fixed forever, but the gap between a high-yield savings account and a traditional one has held for decades. Why can online banks pay more? No branches, no tellers, no property leases, no regional managers and glass offices. Lower overhead means more interest goes back to you. Now, that math I promised. $10,000, 5 years. Traditional savings, $25. High-yield savings account, $2,462. Same money, same amount of effort from you, just a different place to put it. That's not a rounding error. That's a flight, a month of groceries, an emergency fund growing into a real one. I want to know what your bank is currently paying you. Pull up your savings account details and leave the number in the comments. I'll be reading them. I genuinely want to see the range. One thing I hear a lot, is my money locked up? No, a high-yield savings account is not a CD. It's not a bond. Here's how it actually works. FDIC insurance. Every reputable high-yield savings account is insured up to $250,000 per depositor per bank. Your money is exactly as safe as it is at Chase or Bank of America. It's mostly online. You manage it through an app or a website. Most banks have phone support too. It's just not a branch around the corner. For most people, that's a non-issue. Transaction limits. Federal rules used to cap savings withdrawals at 6 per month. That rule was relaxed during the pandemic, but many banks still enforce their own version. So if you need to pull money out 15 times a month, this isn't your daily spending account. It's for money you're letting sit. Transfers. You link your high-yield savings account to your existing checking account and move money back and forth via ACH transfer, usually 1 to 2 business days. Some banks have gotten this down to same day. For most savings goals, the timing doesn't matter.
Coming up, the part most videos skip. There's one specific thing to look for when you're choosing a high-yield savings account that will save you from picking one that sounds great but quietly works against you. There are dozens of high-yield savings accounts out there. Here's what matters. APY. Higher is better, but don't let the rate be the only thing you look at. Fees. This is the trap. Some accounts advertise a high APY, then charge a monthly maintenance fee that wipes out a chunk of what you earned. The best ones charge 0 monthly fees. If you see a fee, keep looking. Minimums. Some accounts only pay the advertised rate if you keep a certain balance. If you're starting out, find one with no minimum balance requirement to earn the full APY. Transfer speed. If you might need to move money in an emergency, check how long transfers take. 1 to 2 business days is normal. More than that is worth noting. App quality. This sounds minor until you're trying to move money at 9 p.m. and the app crashes. Check recent reviews. Sites like NerdWallet and Bankrate maintain updated comparison lists with current rates and fee structures, worth checking before you decide. Rates shift, and what was the top pick 6 months ago might not be now. If you're looking at a specific high-yield savings account and want a second opinion, leave it in the comments. I read them and I'll tell you what I know. A high-yield savings account works best in 3 situations. Emergency funds. Safe, accessible within a couple of days, earning something real while you hope you never need it. Saving toward a goal. House down payments in 2 years, new car fund, wedding. Any money you're not touching for a while and want to grow without risk belongs here. Parking a windfall. Got a bonus, tax refund, inheritance? Instead of letting it sit earning nothing while you figure out what to do with it, a high-yield savings account is where it should be. Even a few months of 4% on a large sum adds up. Now, the honest caveat. If you struggle with impulse spending and easy digital access would tempt you to raid your savings constantly, think about whether the convenience is actually a problem for you personally. Some people do better with a little more friction between themselves and their money. Know yourself. 2 quick ones before we wrap up. 1, it's complicated. It's not. Opening a high-yield savings account takes 10 minutes online. It's just a savings account with a better rate. 2, online banks aren't safe. FDIC insurance is FDIC insurance. It doesn't matter if the building is made of glass or pixels. Up to $250,000, you're covered the same way. Your traditional savings account isn't failing you because something went wrong. It's doing exactly what it was designed to do. Make money for the bank, not for you. Switching doesn't mean closing your old account. Most people keep both. You move your savings into the high-yield savings account, leave your checking where it is, and let the money work a little harder. That's the whole move. The people who haven't done this aren't bad with money. They just haven't thought about it or they figured it would be a hassle. It's 10 minutes. If this was useful, the thumbs up helps. And if you're already using a high-yield savings account, drop which one in the comments. Other people genuinely look at those when they're deciding. What are you saving for right now? Leave it below. Next video is certificates of deposit, what they are, when they beat a high-yield savings account, and when they don't. Worth knowing if you're building out your savings strategy. See you there.